Hello and welcome to Business Television India. You're watching Financial Planner, and with me on the show is Feroze Azeez, Deputy CEO at Anand Rathi Private Wealth Management. Today on the show, we try and defog yet another terms, in fact a couple of terms related to taxes, and the two words that we are talking about, in fact rather two terms that we are talking about here, is exemption and deduction. Now these two words look quite similar, and we'll have Feroze to try and explain to us as to what the real difference between the two terms are. And when filing for taxes, this sort of ambiguity can at times be even more problematic when you're actually dealing with filing for taxes, which is not a very easy process on its own. So Feroze, first up, could you try and explain the difference between the two terms that we talked about, exemption versus a deduction? We'll then go into the detail talking about the examples for each of them, but first up, try and segregate the two for us.
Yes, I think Abhishek, it's very important for each taxpayer to understand the basics of taxation. You don't have to be a chartered accountant, but if you have to live in a country, you have to understand the basic taxation of that country, irrespective whether you've taken up that line of or stream of as your interest or your profession. So point one is understanding some key important terms like exemption, deduction, or even rebate for that matter is important. Exemption is nothing but when the government or the tax authority says that you are devolved of an obligation to do an act. For example, if I speak of exemption, then what comes to my mind largely is dividends are exempt. So if dividends in the hands of the investor are exempt, except those on shares above 10 lakh rupees, if we leave that rule aside, dividends are tax free in the hands of the investor. So you don't even have to add them as your income. So that's called an exemption. You don't have to add it to your income at all, and you don't have to be concerned because all that which you have received in the bank account is an exempt income. The second example to express the meaning of exemption is the long-term capital gains. Till April 2018, long-term capital gains from equity were exempt. So you don't even have to add that as your income source, or you don't have to add it in your total income. So that's called an exemption, where you can really set that aside and you don't have to do anything about it, and because that is under the head of exemption. Now on the other hand, deduction is nothing but a subtraction from your total income, like section 80C, where you can invest up to 1.5 lakh in specified 8-10 instruments for a large period of time, and your gross income, which is greater, then you subtract this exemptions, and these which you deduct, as the name suggests, if your total income for this year is 8 lakh rupees, then you deduct an investment made under section 80C of 1.5 lakhs to bring it down from 8 to 6.5 is called a deduction. And that deduction, as the name suggests, brings down your net taxable income, because it is reducing the gross taxable income and bringing the net taxable income. That's called a deduction. So NPS 50,000 is a deduction. When you buy insurances on the medical side, there are deductions there. There is 80C, which is a deduction. These are all deductions from your total income to arrive at your net taxable income. All right. Whereas exemptions, like we just spoke, are some things which you can keep outside the gamut of the tax filing itself, or you don't have to add it to your income. That's why those are called exemptions. And lastly, rebate. Rebate is nothing but when there is a deduction and you've paid an extra tax, and then there is a rebate given to you, and if the government or the tax department thinks that you deserve to actually get some money back because there is a rebate or a concession you have claimed, that's called a rebate. As the name says, there is a rebate, there is a concession given, and the tax is paid back to you, but initially you would have paid it in full, and then you will submit for a rebate, and if that gets accepted, then you get a refund. That's called a rebate.
All right, now these were the clear distinctions, Feroze. Now exemptions and deductions, however, at the end of the day, both reduce the taxable income, isn't it? And are allowed concession before the taxes are paid. And where does rebate does rebate even have a similarity, when it comes to reducing the taxable income at the end of the day?
Correct. Of course, a rebate also will have the same impact as a deduction if that gets accepted, and if you are highlighting the right concession, you will have a deduction in your total income. But the only difference between a deduction and a rebate is deduction you can decide, and you can see the section, reduce it and reduce your tax liability and pay a smaller tax amount after the deduction. But in rebate you will have to pay the full tax amount, and the rebate, if approved, or if your claim is right on that concession, you get a refund. That's the difference. Both actually have a similar impact, but one of them you can use those sections and reduce your taxable income and pay a smaller tax amount, does not have the inconvenience of claiming back, but the rebate actually has a inconvenience of claiming back. That's the only difference between a deduction and a rebate. The deduction does not require an approval or you having to pay for the full tax and then claiming it back vis-a-vis the rebate. But it's important for you to understand the first word which we discussed. It is exemption, because you hear this word exemption very often in the lingo of taxation. You would have also heard as a viewer, and Abhishek, of course, you would have heard exempt, a triple E category. There are 3 exemptions in certain instruments, so I think it's good to describe one of them. Now, for example, when you buy an insurance policy, like a term plan or a ULIP, unit linked insurance policy, firstly you get an exemption or a deduction in that case under section 80C. Then whatever you earn out of the insurance policy, the growth in that is tax free, and whatever you redeem at the end, the entire capital is tax free. That's why it's called exempt. At the initial stage you're getting a deduction. Second, your incomes which you are making in that product are tax free. Third, whenever you redeem the money, the capital which you receive, including the gains you have made, are all tax free. And instruments like these are called exempt, which is a very popular term in the business of saving tax, at least for individual investors.
Thank you so much, Feroze, for clearing out yet another concept, pertaining to commonly used terms when we come especially, when you're talking of filing for taxes. That's all for this edition of Financial Planner. News and update continue on the other side of the show. Please keep watching Business Television India.